Welcome back, everyone. I hope you're having a great day. And in this episode, we're going to discuss the Dividend stock I just bought more of in my financial freedom portfolio. This is a company I already held a position in, but over the past week I've added more capital to this holding. The company has seen a significant pullback in share price over the past few months, and I believe is now trading at an attractive level, so I went in and bought a few more shares. And that dividend-paying company is BlackRock, ticker BLK, currently trading for right around $617 per share. This is one of the world's leading asset management companies, and they offer different investment products, advisory services, and risk management solutions. So I have been a shareholder of this business for the past few years. My original buy-in was for 10 shares with an average cost above $700 per share. So of course we have now seen a significant pullback in share price to right around the $616 level. I added 5 more shares to my position, now giving it a total market value of over $9,250, making up 5% of my total financial freedom portfolio. But we can see I am down 9.3% in this position, or in the red $951 from my original purchase. But overall, I do plan to hold this company long term, and I do think their financial performance as of late is much stronger than the significant pullback in share price we have seen. So if we take a look at BlackRock, the company now trades with a forward P ratio of only 17.2, and the dividend yield has grown to above 3%, with the current market value right around $95 billion. And we can see over the past few months, from a high of over $750 back in July of 2023, the company is now down over 18% from that high point, so a significant pullback as of late. And if we take a look at a Morningstar report, the estimated fair value for this business sits right around $702. So with the company currently trading right around $616, that represents a 9 to 10% discount from that estimated fair value. And of course, as a long-term dividend investor, I love buying very strong companies when they've seen a significant pullback in share price, and you can get them for a discount relative to the fair value of the underlying business. And if we take a look at BlackRock's latest quarterly earnings report, although the share price continues to fall, their financial performance is still very strong. Organic revenue grew 5% year over year, 7% increase in operating income, their diluted earnings per share grew 15%, which is very fast growth, and they also bought back $375 million worth of shares in the last 3 months alone. So not only do you receive a growing dividend with BlackRock, you get some share repurchases, so the company returns a ton of capital to their investors. And at the end of the latest quarter, BlackRock's total assets under management topped $9.1 trillion, making them best in class in the AUM industry, far above their competitors. And this is of course driven by their wide customer base that has over 40 million investors invested into iShares ETFs. They have over 1,300 plus different individual ETFs available on the market, and a very fast growing part of their business is their Aladdin software, which now has over 130,000 individual users on the platform, and this is one of the key areas why I bought more BlackRock stock. So some investors may invest in BlackRock just for their financial traditional business, but may not know one of the fastest areas adding to the company's top line is actually their Aladdin software. This is an end-to-end investment management and operations platform used by institutional investors, so individuals like you and I do not have access to this service just yet. This involves all asset managers, pension funds, insurers, and corporate treasurers. It provides different risk analytics to build a complete and comprehensive portfolio management tool that allows different diversification tools, risk management softwares, and it's all built into one simple to use platform for these wealth managers. And this has been a key driver to top line revenue for BlackRock. In 2022, their technology revenue reached $1.4 billion, and that's been growing at a CAGR of 12% over the past 3 years, while maintaining a 98% average client retention rate during that same period. Meaning they're doing a great job of adding new clients, and those clients are staying over the long term as well. This is one of the fastest growing areas of BlackRock's business that often gets overlooked by investors. But now we jump over and take a look at their total financial statements to get a look at how the company's been performing over the past 5 years. We can see if we start off with the income statement, total revenue back in 2018 was right around $14.2 billion, and that continued to grow exponentially each year to a peak of over $19 billion in 2021, with a slight decline over the past few years. So I do believe this decline in revenue is short-lived, and I do believe they will continue to grow it going forward over the next few years as interest rates start to stabilize and we get some more stability in the economic environment. But as the company has seen a slight pullback in total revenue, they still remain highly profitable. Taking a look at net income, we can see continuous growth over the long term, and they maintain profitability with over $5.3 billion of profits in the trailing 12 months. And if we take a look at their cash flow statement, as dividend investors, we should be highly focused on a company's ability to generate cash in growing cash flows because, of course, dividends are paid out every quarter through a cash payment. So if we take a look at their cash flow from operations, over time this number has continued to grow as well, and the company is not very high and they do not require a ton of capital expenditures. We can see on average anywhere from $300 to $400 or $500 million of capital expenditures during the past few years. So free cash flow is calculated by taking cash from operations and subtracting out the capital expenditures. So we can see the company does generate positive free cash flow each and every year as well, which is great to see. And of course, I am a dividend focused investor. And if we take a look at that current yield, it comes in at 3.14%. They pay out $20 per share per year with a very safe net income payout ratio right around 54% and a 5-year dividend CAGR at 11.8% with 13 consecutive years of dividend growth. And if we take a look over the long term, since 2003, where the annual dividend was only 80 cents per share per year, we have seen a 17% CAGR over the past 20 years to right around $20 per share per year in 2023, which is absolutely phenomenal. And taking a look at Simply Safe Dividends, their score comes in at a 98, which is considered very safe, and it's highly unlikely we see a dividend cut from this company anytime soon. And along with the growing passive income in the form of that dividend, BlackRock also returns a ton of capital to their investors in the form of share buybacks. Since 2013, the company bought back over $13 billion worth of their own stock at a compound annual growth rate of 15%. So we can see over the long term, there was previously 194 million shares outstanding. That number has continued to decline to right around 151 million as of the latest quarter. So overall, BlackRock was the dividend stock I bought more of as of late. During the past week, I added $3,000 in my position in this company. I now own 15 shares overall, worth over $9,252. So not a dramatic purchase for my portfolio. Of course, my largest positions in Microsoft and Apple are worth significantly more. But overall, as I do with any trade I make for this financial freedom portfolio, I share with you in a video. Of course, I want BlackRock stock in my portfolio for the long term. So although it has seen some significant pullbacks as of late, I'm not too worried. And I may dibble in and buy a couple more shares if the share price continues to fall even further. So overall, I want to thank you for watching this video all the way to the end. This was just a quick update and a quick overview of the company I bought in as of late, one of the leading financial institutions. Do your own research before buying the company and let me know down in the comments if you own any BlackRock shares or if you're going to do some further research and you may add it to your portfolio in the future. So thank you for watching all the way to the end. Please hit that like button and subscribe, and I will see you in the next video.